Okay, it's July 8th, Friday. We're going to do our broader market update here. It's about 20 minutes to close, so we basically have our weekly candle, unless something crazy happens in the next 20 minutes, obviously. We'll start with TLT because I think this is a really important understanding where rates are going, like the 10-year. The correlation to stocks is pretty high, so important to understand that. TLT, again, is an ETF that tracks the long bond, so pretty highly correlated with the 10-year yield. And I tweeted about this that I went short a couple days ago, bought some puts. I did sell those. And I think this is going much lower, but we could be in for at least a little bit of a bounce here, especially after these three big down trend days. Usually after you get this kind of washout, you're going to at least get a little bit of a consolidation. And so it looks like we topped out on day 11. Today is day 14. So you expect we still have probably another 10 days in the trading cycle, in the daily cycle left. So probably quite a bit more downside, but again, just being a little bit more tactical here. And on the weekly level, really important, looks like we are also getting our weekly cycle top here this week on week 3. So that has huge implications. When this goes down, it means that yields are rising, right? So it moves inversely to yields. And so this almost became a bearish outside candle, this weekly candle here. We avoided that fate, right? Like, I don't think that's going to happen in the next 20 minutes, but I suspect next week we'll come in and we'll sort of finish the job, if you will. So you'll get you'll get a move below the low from this week. So that gives you a pretty good target, at least for more short-term downside. I would say by the time we get to the end of the weekly cycle, to the daily cycle, we'll make a new low below the previous cycle low that you can see here on day 35. So that would be the expectation. And on the monthly level, very important, very reliable pattern happening here. So we know we're in longer term decline from like a cycle perspective. We topped out back here in December of 2021. That was month 9, and we've been declining ever since. This is month 16. But more important, on a very tactical level, you see how we kind of poked up and made a new high. The same way that we almost made a bearish outside week, we're now setting up to make a bearish outside month. And that's a really juicy trade because it's only July 8th, right? We have the entire month for this to work, which means it doesn't have to happen in a straight line. We could get a bounce here. We could get some sort of oscillation in this candle, but I suspect we make a new low below here at 108. So that would be your new low for the daily cycle as well. That's how multi-time frame analysis works. And so you can see we've had this huge extension. This was our lower high potentially. Maybe we make another lower low. We get another lower high. That's how a downtrend works. And so if this is telling us that the general trajectory of rates is higher, then that's an important input for us when we're thinking about the market as a whole, because there's going to be some correlation there. If rates are going higher, that's going to do X to stocks, let's say. And so finally, just final look at the TLT chart. This is really telling, and I love to look at this kind of really big picture view where every candle is a year. So this was your big year 2020. We had the huge run up, and then we had a big pullback. We ended up closing here. It was a green year, that's fine, but a harbinger because of this big wick. Then 2021, we actually made a new low. So you can see we poked down there, but then we rallied back, closed up here. Now we've made another new low. So this is the second year in a row where we've made a new low below the previous year's low. This time much lower. And we're also just halfway through the year at this point. Now maybe this year ends up something like this, but you could imagine a world where we're going to sweep these lows here, right? This level that, was somewhat important, maybe get even down into this kind of area right here. So you can imagine at least breaking 100 as a clean round number makes a lot of sense. And that's what you would kind of anticipate. And so that is the sort of big picture view. I would say short term, if we look at the S&P 500, we'll start with, It's possible that we actually had a daily cycle low. So we had a short. It's possible that we actually had a short daily cycle. So you can see back here, we had a really short daily cycle. And again, this is a little bit pedantic. Some sense it doesn't really matter if it's a daily cycle or half cycle low, what have you. The point is, it's an important swing low, right? Like this was clearly a very important swing low. This was only 22 days, right? Topped out on day 7, made our important low on day 22. We came back, looked like we were gonna make a new low, and then we kind of double bottomed here, rallied, and then had a major breakdown. And then you had your really long cycle that went 54 days. You could argue this was actually your cycle low. Doesn't really matter. We rallied, made a high, then came down. And so you can't dispute we're making lower lows, right? This low is lower than this one. This one is lower than that one, right? We're just moving lower. And so this is possibly a short daily cycle of 25 days in the same way that this was a short one of 22 days, right? And so that would make this day 6. Our top so far is day 6. We came down, looked like we were going to make a new low, break that swing low at the 3,700 area. We sort of teased it. You can see these wicks here. We really teased it. Now we've rallied, which is interesting, right? Now, at the same time, we've paused almost exactly where you would expect that we would, sort of really suspenseful for like what happens next week. And we'll look at the weekly chart to get a better view of this. But the count here would be day 13, looking like we're like, on a knife's edge of making a new high above the day 6 high, right? So this is interesting, right? And so if we look at the weekly chart, the other thing I'll just point out, just like thinking structurally, this is a swing low and this is a swing low. This low is higher than this low. That's important, right? This is literally a higher low, right? It's a higher swing low. That's something that we have to respect for now. And that also gives you a really important risk point, right? If we find ourselves in the 3740 area, that's a danger zone. Now we're obviously here at 3,900, and that's 150 points lower. So it might feel like we can't get down there again. Obviously, that could happen in a heartbeat. You can imagine a big red candle like this one look at this. This candle here, like a candle of this magnitude, could wipe out all this progress really easily. Just wham, and then we're back to new lows. But for now, you have to really respect this and just use your stops sort of wisely. Now you think about it, if rates are going to rise, it'll be interesting just to see big picture. It does feel like we're still going to have some serious pressure. Now looking at the weekly chart, this is important. We did not make a new weekly high, right? We did not. This is actually just an inside week. And again, now we're like 12 minutes to close. We're certainly not going to make a new high. We needed to get above 39.46 essentially, and we did not do that. Now, in the same way that TLT chart I showed you, I said we almost made that new low on the weekly, but we didn't, and we probably finished the job next week. Well, it stands to reason we could easily, quote unquote, finish the job here next week, make that new high above that 39.50 area. So that's going to be really interesting, and that also, interestingly enough, coincides with the 10-week moving average. So this line that you'll see on these charts is always a 10-period moving average. And this is a weekly chart, so this is a 10-week moving average. So we're still below that. And so this would also coincide with a quote-unquote test of that level, which also coincides with the 50-day moving average. So a lot of important suspenseful stuff. A big, nice green candle, but still inside on the weekly. And that creates a green monthly candle so far, but still inside. This is not really telling you a whole lot. I mean, it's still pretty early in the month, but we're pretty firmly inside. We need to make a high above 41.77 essentially to start making progress on the monthly level. And that's how you'll know we've bottomed for real, right? We'll start making new highs on the monthly, right? We'll start making higher highs and higher lows on the monthly chart. Right now, we potentially have a bottom here. I suspect that's not going to hold. In the same way that you can see this green candle was like actually made a new high, right? That's important, right? This candle made a high above this one. What month is that? That's March, right? And then the next month, wham. And then the next month, this was just an ugly month to trade. I mean, my God, all this oscillation to basically end up like closing right where it opened for the most part. And then we had bearish follow through. So this could end up being a choppa month, right? We stay inside so we don't make a new low, and then we finish the job in August. Will be interesting to watch. And most importantly, we probably are in the declining phase of the 3-year cycle or 36-month cycle if you prefer. So depending on what you think, like what long term is for you, what your time horizons are, the trend is probably lower on this monthly chart. And so if you have the ability to sort of scalp and you want to be kind of in and out day to day, week to week, that might make sense. But I'm still thinking we have quite a bit of wood to chop to the downside for like long-term trades. Though again, the daily does look bullish as we talked about, but important to understand that, bigger picture. And we'll just look at the annual chart the same way we did for TLT. So not as bad as TLT by any means. Notice TLT was just kind of falling off a cliff. This is actually, we did make a new low below last year's low momentarily. Well, no. Yeah, we did momentarily. But then we recovered it. That's what this little wick is. But I suspect we're going to get back down there again. It's rare that you just get down there, you recover, and then it's over. You'll at least get a retest, and then it's a question of, like, do we survive that retest? And if you look at, we'll just flip over the Qs and IWM to just look at this same view. Qs is a different picture, right? Like, doesn't that chart look different? We are still below last year's low for the Qs. That's important to know about. That tells you the Qs is still underperforming the S&P. That could change. That could start to change on a dime. We could start to see outperformance on a daily level. But right now, it is massively underperforming. We are literally below last year's high. And if we look at SMH, that thing really is really shitting the bed. And the reason, there are a bunch of fundamental reasons for that, right? And I think the charts are telling you, like, the charts are showing you the reaction people are having to those fundamentals. So same pictures as the Qs, maybe a little bit more extended to the downside. And you think about this huge rally that it had, there's plenty to cool off. And finally, we'll move on to IWM. Ooh, yikes. This is actually the worst of them all when you think about its relation to where it is versus the low from last year. So the low from last year on this one was 190, and we're down here at 175, so like 15 points lower. That's no joke. Again, not a bad rally over this time period. So, we could be looking at like a protracted down period. We've been going down obviously for like 8 months for this one already, but this could be only sort of, we could be still relatively early in this kind of grind down sort of phase. And in terms of just the cycle count, it's pretty much identical for IWM on a daily level. Well, in this case, for IWM, it would be day 14. Same kind of idea, higher low. IWM weekly level, also still an inside week, didn't make forward progress. Also week 19, I forgot to mention. So totally possible that we did get our weekly cycle low a few weeks back, right? Like here. Wow, in the case of, but the question will be, right, we need to get above, in this case for the Qs, we need to get above 276, right? So actually, wait, is that right? No, we need to get above 297 essentially. And we're not too far. We're about $2 away. But it's the same kind of picture as the S&P, where it's an inside week. We have not gotten that. We haven't made that new high, but it would set us up to make that new high for next week, sort of quote unquote finish the job. And this could become, I'll zoom in here. Apologies, that might be hard to see. This is actually week 13. This could become our weekly cycle low. It would be a really early one. It would be kind of abnormally sort of short. You can see we had a 17-week cycle here. So, again, I always say these numbers, these counts are not magical. That said, because the longer term sort of picture is bearish. I wouldn't be surprised to see a reversal. You know, we could see some upside next week. Maybe we make a new high, kind of test this area. Then we end up with a nice big long upper wick that's pretty bearish. So we'll have to see how that kind of all plays out. But that's the picture. It's complex trading, but the levels are very clear.